Accounting is historical, but valuation is futuristic. We always say, while doing valuations, you have to remove the hats of an accountant and don the hat of a valuer. But accountant is equally important, as accountants record what has happened in the past. So today we are going to don the hats of an accountant and talk about IndAs and fair value in accounting.
IndAs is what we call the converged IFRS, which has been introduced mainly because there were differences in terms of the gaps, generally accepted accounting practices all across the globe. So in simple words, we can say there was a gap in terms of gap. So there was a need to have some kind of global standards which are accepted all across the globe. If we think of a common kind of accounting for various issues, comparability of financial statements across industries, across countries get enhanced at the end of the day. The main objective of IndAs in terms of financial statements has been improvement in terms of compatibility, relevance and reliability. Valuation has been a very interesting concept because I would say that when you look at value of an asset, there are two kinds of things. One is called an entry price and one is called an exit price. An entry price puts focus in terms of what you pay to acquire an asset. An exit price would focus in terms of what you get to sell. So the concept of fair value is focused on exit price, where we don't look at what we pay, but we look at what we receive in order to sell an asset. So there has been a transition change as compared to the Indian GAAP, when we are looking at the concept of fair value of an asset which maximizes the value we receive. Similarly, in terms of liability, we start looking at the price that we could be paid in order to transfer the liability but not to settle the liability. So fair value has brought in what we can see the concept of an exit price.
A couple of items in the balance sheet today are being measured at fair value. I would say that there are broadly three categories of items in the balance sheet. One is when you get a choice in terms of recording things at a cost or at a fair value. Second, in terms of items which are taken purely at cost, and we can say certain items are definitely measured at fair value. Like, for example, if you look at property, plant and equipment or intangible assets, you get a choice in terms of accounting, whether they are to be taken at a cost model or at a revaluation model. Like for example, if you look at an investment in property, the measurement is purely at a cost model. We can only disclose a fair value, but we don't reflect the measurement at fair value. And there are a couple of other items like financial assets, especially when you got investments in equity instruments of a company, they are taken at a fair value. So we can say yes, there is a blend in terms of the balance sheet. And there are a couple of other items like financial assets, especially when you got investments in equity instruments of a company, they are taken at a fair value. So we can say yes, there is a blend in terms of the balance sheet. Currently, if you look at the position in terms of a company for which data is a self-generating asset, IndAs 38 prohibits the same. But on the contrast, if you look at a company which is acquiring a given company, and when we are looking at acquisition accounting under IndAs 103, the same company which is an acquirer would reflect those intangibles which the acquiring company is not reflecting in their books of accounts. IndAs 103 would allow you to reflect those things in your financial statements. Now, I personally believe that there seems to be, a little disconnect in terms of what the seller is accounting as per IndAs 38 and what a buyer is accounting under IndAs 103. So I think there seems to be a situation where moving forward, you would expect many companies would be allowed to reflect all those intangibles like customer list and data, which should be reflected in the books of accounts of the company, which is self-generated. and maybe we need to apply a revaluation or a fair valuation model to all these particular items. Thank you.